Good morning, good morning, good morning, everybody. It is 10 a.m. on Thursday morning, and you know what that means. It is time for Her Money and Investing Show with yours truly, Jessica Perrone. That's me. I am so excited because I'm going to be on vacation next week. Please try not to miss me so much. Sometimes when someone leaves and you miss them, then there's something going on here. There's something good going on here. But don't worry, I do have all of my videos on my website, herfiniq.com. And I've been working really, really hard on some fun TikTok videos as well. So if you do have a chance, head on over to TikTok World. I'm sure you're already there, but when you are in TikTok World, go ahead and do a quick search for herfiniq and see what I've been up to over there. As you stop into the broadcast, say hi, and definitely contribute into the conversation. Love hearing from you guys, love answering your questions, love having you contribute into the broadcast. So with that said, while I'm on vacation, check out the TikToks, check out my YouTube videos. They are all listed on my YouTube channel, HerfiniQ. Yeah, it's all at HerfiniQ, so that's pretty cool. And you can binge the show and catch up on any that you might have missed out on. I've also posted all of my fall classes online, so you can check those out as well, depending on where you are in your journey, whether you're getting your financial ducks in a row so that you can start investing, or if you have your financial ducks in a row and you want to start investing. These are all classes that you can take to help you take a step forward and starting to build your wealth and understanding the language and process of investing. So with that said, speaking of fall classes and school starting this fall, yesterday I took my daughter's school shopping at the mall. And of course, I started looking around me for my investing concepts that I wanted to talk about today. Hey, good morning, Karen. It's so nice to see you. Thank you so much for stopping by. I'm sure your school shopping is a little bit different than mine, right? Yeah. What's the hot shops that you guys are going to? Put in the chat. I want to hear about it. Oh, hey Adina, thanks for stopping by. Really super appreciate it. But going back to my story. So yes, I have 3 teen daughters. Yes, I do. I have a middle schooler and 2 high schoolers. And the 2 that I took shopping yesterday are very different. My middle teen is a little bit alternative. She likes stores like Hot Topic and Spencer's. And then my other daughter, my younger daughter, she is your like trendy, cool type chick. Chick. I guess I'm the only one that says that word, right? I was probably dated. So she is your quintessential suburban teenager, right? And so the stores that she wanted to go to was like Foot Locker for Nikes. Okay. So I'm putting these into my head, right? And then she also wanted to go to PacSun. So, I like doing a little bit of market research when I am anywhere, right? So, of course, guess what I did? When I was at Hot Topic, what I did was I asked them, I said, is there a good place to get jeans? Now, this question had 2 reasons why I asked it. The first one was because I wanted my daughter to hear from girls that she, dresses alike from, where they got their jeans. So I didn't have any battles when it came to jeans. But I also wanted to hear from the teens that were working at the store, right? What trends, what jeans are the coolest. And this kind of surprised me. Hey, Carissa, welcome. Hey, Gina, so glad you made it. Hey, Mina, so glad you made it too. And so what really surprised me was, number 1, American Eagle. So not only did my younger daughter like American Eagle, right? But so did the alternative daughters, salespeople in Hot Topic. Does that make sense? So I'm like, this brand is branching between the different types of trends. Does this kind of make sense? Okay, so American Eagle. And this reminded me of a previous show that we were talking about. And then the other girl, she was actually really excited about this. She needed to share this with us. And I love the enthusiasm, because it was kind of like my enthusiasm when you guys come see me every week and I start talking about the markets, and I'm so passionate about it. So she goes, "Oh, you have to check out Target." Yeah, no joke. And didn't I say this? I was saying this a couple weeks ago in another show where I had gone to Target to pick up just some like toilet paper, like food items, whatnot. And my daughter checked out the clothing section and was like, "Mom, these clothes aren't terrible. Mom, these clothes are really priced well." Yeah, that's from my little trendy, fashionista daughter. But I was so excited. I was like, okay, this trend that I'm seeing, right? This trend is now, I'm hearing it from outside the family. I'm hearing it from salespeople at other shops. They're like, and she was very excited about it. She's like, "I tried on the jeans. The jeans were really great, blah, blah, blah." And she went on a whole tirade about why she is loving Target clothes and jeans. Okay. So this is the type of market research that you can get done in your day-to-day just by asking simple questions, making casual conversation. And what's really, okay, now this is another reason why this is so interesting, is because Target reported earnings yesterday. Did you guys hear about Target's earnings yesterday? So the reason why I'm bringing this up is because Target reported earnings yesterday and they were disappointing to Wall Street. The earnings of Target were disappointing from Wall Street. We kind of saw this coming down the pipeline, right? We've been hearing about Target saying, "Oh, we have too much inventory. We're going to have to discount it to get it moving, et cetera, et cetera." Now, remember, earnings report on the performance of the company from the previous quarter. It is not real time until you listen to the conference call. And in the conference call, that's usually when the executives make sort of forecasts for the months to come. So with that said, what I am feeling from the street is that the teenagers are really excited about Target's clothes. And even you, right? Even you, Adina, you're saying, "I'm buying a lot of Target clothes," right? We're hearing this buzz from us, the consumers, the moms, the girls, whatnot. I'd kind of be interested in what the dads say about the clothes, but from the women, Adina, thank you for chiming in the chat, and from the teenagers and the older teenagers and the younger teenagers, everyone's coming back and saying Target stuff is pretty darn cute. Okay. So with that said, potentially when they report next quarter, right, in 3 more months, because the companies report on a quarterly basis. So potentially, if we see them report that, their clothing aspect of their business is improving, right, and that sales are improving, then what we are feeling as the consumer has been verified. And this feeling that you have as the consumer, right, can grow. You can say, "You know what? I do know what I'm talking about. I can sense these trends." And then you have more confidence. So that is why I like to encourage you women, ask questions when you're out and about. Notice things, right? Write down companies that you are interested in monitoring, right? Write down those feelings that you're having, okay? And then watch the news, watch the performance of the companies, and see if those feelings are validated. And once they are validated, then you become a little bit more confident. You become more confident in the trends that you are noticing. Isn't that kind of neat? I hope you liked how I brought that all together. I really do. Hey, Adina, you know what? I'm noticing that you put in here about menswear, that the menswear section is small. and you don't think they have a lot of fashion for menswear. If you have any guys out there, let's do a poll. Let's do a poll on Target and men's clothing. And then another thing was that they have a lot of baby stuff after the COVID baby boom. And interestingly enough, I'm still kind of seeing a baby boom out there. I'm kind of seeing a lot of pregnant women around. Anyone else noticing that? Because I'm seeing a lot of babies and a lot of pregnant women out there. Anyone else seeing that? So you might be onto something there, Adina, bringing up that there is a little bit of a baby, there's baby stuff out there. Maybe there is a double baby boom, right? Who knows? You never know. So let's monitor that. Hello, scribe, write it down right now, on 8/18/2022, another baby boom. Are we noticing a baby boom right now? Oh, Adina, congratulations to your favor, to your friend who went into labor this morning. Congratulations to her. And we will send very positive, very happy, very profitable thoughts to the mommy and baby, for sure, for sure. Okay, Karen is also chiming in here in the chat about all the dads I know are wearing Vuori. It's private, but I'm guessing it will be bought at some point. Karen, thank you so much for chiming in on that. I have not seen that, but I am definitely going to bookmark it. Yes, I talked about bookmarking versus getting your feet wet last week, but I'm definitely going to bookmark it and check it out and do some little bit of research on that as well. Hey, Sunny, thank you so much for joining us today. It is so cool to see so many people in the chat. Welcome, welcome, welcome. It just makes me so happy to see all of you ladies here practicing the language of investing. Okay, so I talked about going to the mall. I talked about, Hot Topic. Hot Topic is actually private. Spencer's, I didn't have a chance to look at. Nike, yeah, we know Nike is publicly traded. PacSun, I didn't have a chance to look at. American Eagle is publicly traded, and so is Target. So if you have your identifying investment sheet and any of these companies are companies that you use and interact on a regular basis, write them down, start monitoring them, and start investigating them, researching them, and watching how the stocks move and the news flow on it and any trends you may see on these companies on your own. So moving forward here, I wanted to talk about something. So yesterday, Target reported earnings pre-market, and it had, even before the market opened, Target fell 3.3 in the pre-market trading hours. So this might be confusing for some of you guys. So what I wanted to do was actually take a couple minutes to talk about market hours and what exactly it means. Now, different asset classes actually trade different hours. Yes. So for example, crypto actually trades 24 hours, 7 days a week. Yes, it does. However, the US, and I'm talking about the US markets, has the main trading session, which is open 9:30 a.m. to 4 p.m. Okay, so those are your main trading hours. However, there is a pre-market and there is a post-market. So what I did here was I actually went over to TD Ameritrade and checked out how they define their trading sessions for you. So based on their trading hours descriptors, the US sessions trade Monday through Friday, and the day session or regular session is 9:30 a.m. to 4 p.m. as we discussed. The AM session, okay, the pre-market session can be traded for select people 7 a.m. to 9:28 a.m. Okay, so you can keep, did I say PM or AM? 7 a.m. to 9:28 a.m. And different platforms will allow you to trade the pre-market and the post-market depending on different criteria. And you kind of need to investigate how your platform, puts these criteria together to see if you qualify for trading those markets. Now, the PM session, which is after hours, the post-market, is traded 4:02 p.m. to 8 p.m. So technically, on some platforms, some people can actually trade from 7 a.m. to 8 p.m. Monday through Friday. So that's how the sessions work. Now, when the market is estimating when earnings are going to be released, typically, now there's always exceptions to the rule, but typically earnings are released pre-market and post-market. So now when you see in financial news or you hear in financial news that these earnings were released pre-market or these earnings were released post-market, or if this stock had pre-market moves or this stock has post-market news, you know exactly what that means. Yes, do you feel a little bit smarter now? I know it's a really simple thing, but I realize I'm like, maybe there's certain women out there that just don't understand it. I really need to talk about those specific little items, those vocabulary items that will help you understand, the markets, the financial news, that much more. So now you know what pre-market and post-market news, news and events and earnings and moves means. Yeah, congratulations. Go you, go you. So the other item I wanted to talk about is, I mentioned TD Ameritrade. I use them as an example for pre-market and post-market trading, their rules, right? And there's all different types of ways to put your money to work. And there's all different types of retail brokerages, and there are robo-advisors, and there are financial advisors. So I know that I talk a lot about getting your financial ducks in a row. And in my fall classes, I do talk about the before investing, the financial ducks you need to get in a row before you start investing, whether it is cultivating your credit score, whether it is paying down debt, whether it is establishing an emergency fund, putting together your budget, identifying savings. These are all aspects. These are all financial ducks that you need to get into a row before you start investing. But say you get those financial ducks in a row and you're like, I have paid down my debt. I've gotten rid of all of my bad debt, all my credit card debt. I have that emergency fund. And you know what? I am ready to start investing, right? Yay! Well, first of all, you get a big yay! Good job! Woo-woo! On the way to financial independence and wealth. Yes, that's the first thing you get. You get a big woohoo. But the second thing you want to start thinking about is whether or not you want to passively or actively invest. What does that mean? I know you guys are just like, what does that mean, right? Yes. So this is one of the things that you should start thinking about. So actively investing is basically when you invest yourself, okay? And that's also a self-directed investing strategy, okay? So if you as an individual want to actively trade or actively invest, because you can, in a retail broker, okay, you can follow these strategies yourself. You can be a passive investor or you can be an active investor, okay? And there's also financial advisors that are active, right? or passive as well. There's different kind of strategies, okay? So what I want to do is talk about active versus passive, okay? And then I'm going to take that another step further. Because when I started investing, it was interesting because I didn't understand all of the different types of accounts out there and what they meant to my investments. And this is something I feel would be really, really helpful for me to break down for you. Okay, so passive investors typically invest in diversified funds and have a long-term strategy. Okay, so what I mean by a long-term strategy is that they're buying it and they're just leaving it, right? They're like, okay, I believe, and this is actually a strategy, one of the strategies that I am talking about as well, because it is proven that the long-term strategy, the long-term investing strategy will outperform a short-term active trading strategy. So there are a lot of studies out there. I think I'm actually going to start putting out some TikToks on that as well. So definitely check that out. So when you are passive, right, you're kind of setting it and forgetting it. Okay. So that is sort of passive. Or you are on a monthly basis saying, okay, I am going to invest, for example, in the SPY. The SPY mimics the S&P 500 index. It is a basket of stocks, right? And what you're thinking in this passive mind frame is that, okay, I have X amount and I am going to every month put X amount in the S&P 500, the SPY. I'm going to buy shares of the SPY. And so you, on the first of this month, you put X amount into it. On the second month, you put X amount into it. Okay. And this is very similar to the strategy that you would do with a robo-advisor or financial advisor. Now, they do diversify amongst ETFs and mutual funds and whatnot. But I'm trying to give you an idea of passive versus active. Okay, so that would be an example of a way that you could passively invest, and you could be a passive investor, excuse me. An active investor, right, will frequently get in and out of positions, okay, and is typically more into single stock names. So, for example, if you are into trading these crazy meme stocks like Bed Bath & Beyond, who saw the Bed Bath & Beyond like up and down over the last couple of days? Okay, riskier, right? Riskier. It is. There's more risk associated with trading meme stocks, but in addition, trading in and out of stocks on a daily basis, a weekly basis, etc. Okay, so there's more risk associated with active investing. Now, the other aspect that is important to know when you're considering passive versus active is passive, you're setting and forgetting, right? And what is proven is that the markets will go up over time, right? That is proven. With the active trading and investing, though, you need to stay on top of your positions. You need to stay on top of the news. Yes, you do. So it's just like my day to day, right? I love the markets. Okay. I wake up early. I read my news. I am constantly looking at everything. That's fun to me. That's really, really fun to me. But some people don't want to be bothered, and that's okay. Where other people, they're like, I love it just as much as you do, Jessica. Okay, well then that's perfect, right? then you can be an active investor because you're going to put in the time, right? Now, understand consistency. I actually put out a TikTok yesterday about consistency. And in this TikTok, it came to me, I was like running for the day and I'm like, oh, I consistently run and therefore I am fit, right? I love to run. I run almost every single day. I don't run on show days because I'm busy putting together my script. But because of that, I have results. I have physical fitness results. Because I consistently put time and effort into my investments, I have results, right? So that is the type of mindset that you need to have, though, if you are going to be actively managing your investments. Now, what a lot of people don't understand is that you can have passive and active investments in a portfolio. You can, yes, especially a retail broker. However, with, for example, like a robo-advisor and most financial advisors, you're not really going to be taking an active investing role. You're going to be taking a passive investing role. And there's nothing wrong with that. There is absolutely nothing wrong with that. Now, I do talk about benchmarking often. If you are considering actively investing in trading, I recommend having a passively managed account as well. That way you can benchmark your performance. And not only that, but it's kind of like training wheels, So if, for example, your active investments are off for the day, right? As opposed to like beating yourself up like, oh my gosh, I made such a bad decision. If your, for example, robo-advisor account is off for that day as well, you might be able to say, oh, you know what? It's the overall markets. It's not just me. It's the overall markets. So it can help you benchmark your performance. Now, conversely, if your robo-advisor is up significantly, right, and your active investments are your active investment account is low, well, then maybe you weren't cut out for that active strategy. So before you start investing, these are some things that you want to start thinking about, right? Are you cut out for a passive strategy or an active strategy? Or do you want to do a combination of the two? Because remember, you do not have to pick one strategy. No, you can have your retail brokerage over here and do an active strategy, and you can have your robo-advisor over here, and that can be a passive strategy. You can also have your 401k over here. There's different strategies, right? Because if you maxed out your 401k contributions, but you still want to continue investing, you can do that too. So there's all different types of setups, and there isn't one solution that is correct. And you really have to look at what is the best for you and your financial position. But these are things to think about when you are starting to invest as well. Okay, so I did talk about 401ks, and that kind of starts me thinking about work, right? And return to office. How many of you guys in the chat have like husbands that are returned to office, that are that may have been like remote and now are like, oh my goodness, we have to go back to office. Any of you guys experiencing this? Well, according to Bloomberg yesterday, they wrote an article about the return to office showdown is looming. Companies such as Apple and Peloton have told U.S. corporate workers to come back to their desks in September. And whether they do will say a lot about the balance of power between bosses and underlings. But for junior bankers who have relished an unusually chill summer for the finance industry anyway, anxiety is mounting thanks to lackluster work, plummeting deal making, and the prospect of shrinking bonuses and layoffs. So, we may see a return to office, right? Showdown. But coincidentally, and this may be a playbook from Tesla, right, and Elon Musk, the day before, Apple was announcing layoffs. Yes, so this was out of Bloomberg on 8/16, the day before their return to office bit. And they reported Apple Inc. laid off about 100 of its contract-based recruiters in the past week, part of a rush to rein in the tech giant's hiring and spending, according to people with knowledge of the matter. Yes. So remember, a few weeks ago, I talked about how to be relevant, how to be visible at work to prevent layoffs. And I forget which day it was I talked about it, but definitely revisit that broadcast. I even wrote a blog article about it, and you can check out the blog as well for ideas on how to be visible and how to be relevant to prevent layoffs. So definitely check that out. So game on. Okay, all of you know that I am a huge football fan. Yes, I love football, and I feel like football season is the best season of the year. Yes, I do. I love it. And I am really kind of excited that Amazon is going to be hosting Thursday Night Football this fall. I don't know if you guys knew that, but good for Amazon. Now, what was interesting, though, is that I saw this headline come out on Seeking Alpha that Amazon's Thursday night football games will be included in the Nielsen weekly TV ratings. Yeah, why do you guys think that was interesting to me? Why do you think? Well, first of all, it is the first time that a streaming TV service will have its programming included in the weekly ratings from Nielsen, which for decades has been the yardstick by which TV program viewing and popularity has been measured. Why do you guys think that measurement is so important? Does anyone have any ideas out there? Does anyone have any ideas? Well, it's because advertisers, right? When the company comes to advertisers, advertisers want to know how many eyeballs are on that show. And the higher the number of eyeballs, the higher the price they can get for ads, and thus increase ad revenue. Okay. And that's exactly what they said in this article here. And so Amazon said that the partnership with Nielsen will help advisors by providing them with apple-to-apple comparisons across their multi-channel media investment and access to Matrix from Amazon that will provide actionable insight to understand brand awareness, engagement, and sales. Now, the other aspect that's sort of interesting to me is that it keeps Nielsen relevant, right? Yes. Not only does it help Amazon to show apples to apples, Amazon has their own matrices. Yes, they do. They can sell you how many eyeballs are on that show. Yes, they can also tell you how long they were tuning and like what aspect or what ad they turned off, how far into the game based on how boring the game was, they turned it off. Yes, Amazon can give you all of these statistics. No joke. And I'm sure the NFL can too. But what I feel it also does is give Nielsen the ability to stay relevant. And with Amazon submitting, guess what? Maybe Netflix will too, because they are all looking into having streaming services that are free with ads. So Disney, Netflix, yes. So this also creates a road for Nielsen to start creating a database of ratings for advertisers. So yeah, that's why this headline was particularly interesting to me. What do you guys think about that, right? What do you guys think about that? Okay, so let's see. Moving on, and okay, just a couple headlines here that I thought were kind of interesting because I do like to end my those broadcasts with those really interesting headlines that I see since I read so much news. And the first headline that I'm seeing that is interesting comes from Roll Call. And could it be that COVID is no longer a threat? How many of you guys have heard of this or even felt this going on? Okay, well, it appears that the Center for Disease Control, the CDC, and Prevention eased COVID exposure and COVID quarantine guidelines Thursday. This was this past Thursday, saying that between population level immunity and available treatments, the risk of contracting severe COVID-19 is now extremely low in the United States. Yay! Yay. That's so awesome. But the bad news is that the CDC updates monkeypox guidance to include dogs. Yes, it seems that dogs can also get monkeypox. Yes, so dog vaccine, Chewy. Hey, Chewy, dog vaccine for monkeypox, please. Yes. And then another headline that I saw coming through here is that there may be a new extreme heat belt. Yes, new extreme heat belt that may cut through a large swath of middle America over the next 30 years. Residents from Texas to the Great Lakes could experience heat index temperatures above 125 degrees Fahrenheit by 2053. Yes, I'm actually going to put this link. I'm going to put this link in the chat here so you guys can see it. I know that this is definitely something that is going to be of interest that we're seeing going in the future. Another thing that I saw, and this is just, random. I was reading a Bloomberg newsletter about Seville and the precautions that they are taking to make their town cooler. Yeah, if you can Google it, Google like Seville, Spain, and heat. What would it be? What would the keywords be? Heat. I don't know. Heat, Seville, Bloomberg. Google it. Intriguing, like putting up tarps to cool the streets, doing aqueducts that were created, that the technology was created long time ago to cool down the city by certain degrees. Oh, Seville cooling technologies. That's what you need to Google. Yes. And you'll see all these really neat technologies that they are implementing to cool the cities. Maybe our cities could also take note and have a lesson from that as well. I know the lawns in my town would greatly appreciate it, for sure. And as I like to do, I like to end each show with a little bit of inspiration. And the quote of the day, I love this quote. I'm so glad it popped up. It is, "You can start late, look different, be uncertain, and still succeed." Let me repeat that for you. You can start late, look different, be uncertain, and still succeed. That's from Misty Copeland. And that is my wish for you financially, that you will realize that when it comes to getting your financial ducks in a row and investing, you can start late. It's never too late to start. You can look different. Yes. It doesn't matter your background, your ethnicity, right? There are so many ways you can get investing. It is the democratization of investing. And you can do it. There are so many ways to do it. You just need to get educated. You just need to learn the different ways and learn the language to gain confidence. And you can be uncertain. You can be uncertain, but by learning and practicing, you will build confidence. You will. And then you can build upon that confidence and build your wealth and start investing. The process is never too late. And guess what? You are starting just by being here today. Yeah, you are. I am so amazed at the community we are building of women committed to financial health, growth, and freedom. You may be overwhelmed in getting your financial ducks in a row. You may be apprehensive about learning the language of investing, but it is baby steps, and I know you can do it. And should you wish to take your money and investing journey outside the show, check out my fall classes. They're all listed on the website. That's herfiniq.com. Here, let me put that in the chat here. herfiniq.com. That's the website right there. And also sign up for my mailing list to be notified of upcoming interviews, panels, workshops, and announcements. I'm Jessica Perrone, founder of Her Financial IQ. You have been watching the Her Money and Investing Show. May the markets be in your favor. Bye now. Thanks for stopping by. Thank you so much, Adina. Thank you so much, Karen. Thank you so much, Sunny. Thank you so much, Carissa. Thank you so much, everyone that showed up in the chat today. And even those that showed up and didn't participate, it was so nice having you here. Please tell your friends and check out my TikTok. Have a fantastic day. Bye now.